and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, reviewing what's been going on most recently with the price action and what I think is likely to happen next. As I get into today's video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Tap the bell, selecting all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you're watching this on Twitter, then why not go ahead and give us a follow? Really do appreciate that. Give us a retweet. Really does help push the content out to more like-minded individuals. Let's waste no more time though. Let's jump right down into the hourly chart and kick things off and see what's going on. We've had a really slow, boring weekend for Bitcoin. And this isn't unusual. We're kind of expecting this. We don't like to trade weekends because of the low volumes and just basically ranging markets. Ultimately, we are still, in my opinion, trapped inside this triangular wedge. This triangle pattern from an Elliott wave theory point of view would be a wave 4. If I zoom out of this for a second, you can kind of see we are looking still to move on down. At the moment, we are actually reasonably positioned, but let's go ahead and just review where this is currently landing. Okay, we can see here that we're still getting rejected on that 50 EMA. That's the line, the red line that you see on the chart here. Okay, we can see that we have this move to the upside here. We've broken down, we broke back up again. So to me, it looks like we are in a kind of A, B, kind of C structure over here. We have the A, B, C structure this side, meaning that essentially it looks like, I mean, it could be possible that that broke up a little bit, but I don't think that's the case. I mean, I guess it's kind of possible that we did, but I don't suspect that's the case just yet. Let me refresh that for a second, because if I take this down to a 15-minute time frame, it is this move here. It actually does look like it could potentially have completed here. So let's go back up into our hourly. What I was looking at there was the fact that this candlestick is actually lower than this one, and we actually do have a 3-wave pattern right in here. It's actually quite a small one. So we have it there, then we move down in a 3-wave pattern, then we move up in the 3-wave pattern here, like this. Okay, now we're just breaking down. This would be A, B, C, D, E. So it should be actually getting ready for a move downwards. Let me go ahead and throw this into the actual structure. Okay, so this is the problem with the weekends, is that they're really, really quite slow. So let me go ahead and find it would be here, and then we'd have the D wave, and then this is your E wave, essentially meaning that we should be looking for this break to the downside. Now, it could be that this is slightly off, and actually this was your C, where this is just now your D wave, and we're still waiting for the E wave. Okay, it's possible that that's still the scenario, but we'll find out soon enough. The momentum indicator is the thing that's throwing me off here a little bit, because it is in the oversold area, and normally you'd expect to be overbought when we kind of want to exit out of the E wave. But again, that's no guarantee, because the stochastic RSI shows the momentum behind price, does not show you the actual direction of the price action. So it's a little bit misleading at times. Ultimately, though, with our structure here, we are still targeting out the lows between 23,287 and 24,113 as per yesterday's video. And so at the moment, that's kind of where we sit. Invalidation sits way up here at 29,109. So if we want to see Bitcoin break out of this structure, then that's the area that we need to go to. In terms of fair value gaps, well, we filled out all of these ones here. These were from 25,000. We had one up here at 25.7. We had another one at 25 to 26. We had another one up here at 26 to 27. And obviously on the high side, 27.3 to 27.7. All those fair value gaps have been filled. We can go ahead and remove them. Down here a little bit lower, we do have this bigger area, this bigger gap on the daily time frame, and that's kind of where we're looking to kind of move it down into. Okay, so structure wise, it's looking pretty interesting on our daily chart. We don't want to kind of get too carried away. We want to just focus in on the hourly time frame here with this current move. But for the larger time frame, if we go up to the daily time frame, you can kind of see our moves to the downside. We do see a lot of fair value gaps here when it comes to this. Let me go ahead and throw on smart money concepts. You can see we filled out this one here. we can see actually they're not being marked up correctly. We've got obviously these discounted ranges, the swing lows and things like that, but actually there's a few fair value gaps in this journey here that we should be looking to kind of get at as well. So ultimately it's not looking as strong as maybe you'd want it to be. But ultimately, yeah, we are moving in that direction by the looks of it. So I think ultimately we are still looking quite bearish. Now, if I throw the Gaussian channel on, it's just loading up there. Let's see if it'll come in here. You can see that we're way below the green area. So again, the idea here is that now this has gone red. We are in a bearish state of play. Maybe we'll take a look at that on the weekly time frame in a moment as well. So ultimately, our structure looks like it's still looking to pull down into the wave 3. The wave 3 is not yet complete. We can see that from the hourly chart. We are still looking for progression downwards towards our targeted range. And then, of course, we'll bounce up before going down into the final 5th wave low point here. On this kind of 5-wave drop at 22,659 to 23,426 approximately, depending on where the wave 4 goes. The higher wave 4 goes, the lower the wave 5 has to go. Invalidation, or the target range to break this structure on the daily time frame, comes in at 28,588, and so that's going to be the expectations that we are looking for here. Okay, so ultimately that is kind of where we sit with the daily time frame. Let's take this up into the weekly, where we got the weekly close above the 200 EMA. As you can kind of see just here, it bounced from the 200 EMA. This gives us, gives the bulls anyway, some kind of strength in thinking that things are looking okay. I suspect, however, we are still likely to move on down and to break the lows here when it comes to Bitcoin on the weekly time frame. We are still looking lower. We still have the structures on the smaller time frames that get us there. And of course, you can see that our trend lines here, guys, if we bring this right out, connecting all the lows and all the highs, our current lows on this curvature line were going to indicate to us that we're going to be looking to come down more towards the $11,000 to $12,000 range. Now, obviously, that would be a new lower low. It's a very random place to stop at the moment, right where we have. Okay, and I suspect that that is not going to be a strong place for BTC. Lose the 200 EMA, and I don't think it's going to be pretty sight for Bitcoin. At the moment, we got rejected from our previous area of support that's gone into the resistance. We did consolidate here for a while, but we've been unable to keep it. This is a very impulsive break to the downside, not like we saw previously. The previous support that we found on this 200 EMA, let me bring this up here, okay, was from this overlapping structure. Okay, this overlapping structure right here, it basically allows you to see a correction within it. Okay, whereas this move to the downside here is an impulsive break to the downside. This is more sinister. This allows you to drop down deeper. Okay, so it's not anywhere near the same kind of clarity that you saw previously. This is different. We can't expect the same result just because you're bouncing currently from the 200 EMA. This is just a wave 4 positioning on that hourly chart. We're likely to break this down even deeper and so forth. So not going to hold, in my opinion. Our stochastic RSI has still got some room to correct. So again, it's not going to be an indication of things to kind of come. Now, if I take this out into the USDT pairing, you can see that actually we're not on the USDT 200 EMA. Okay, so the USD, we're bounced from it, but not from the USDT. And here you can kind of see this sits at 24,663. Okay, so there's still room to the downside to be had here. Again, the structures are quite clear in my opinion. Okay, so from everything that we kind of talk about from the technical and analytical standpoint, it looks bearish to me for Bitcoin, but do expect a little bit of volatility with bounces to the upside from here and there. Ultimately, though, the trend is to the downside at this point, unless proven otherwise, which essentially means we have to break those structures by rallying up quite strongly. So targeting out 29,000 should kind of get you there, but if that doesn't happen, unfortunately, we have to be thinking about these moves towards the $23,000 to $22,000. Let's bring up our data. So membership.cheekycrypto.io is our membership website. We hold a 7-day free trial across all of the various different plans that we have. We have many different benefits, everything from AMAs twice weekly, a private Discord, exclusive chats, exclusive member-only videos and member-only technical analysis, through to trading and alerts and data and education, so much. You can check this out, obviously, in the link in the description below. We're just going to focus in on the data zone for Bitcoin. This is on-chain data for BTC. I'm going to bring that up here. So here we can see some general overview stats, everything from the hash rate through to the issuance and inflation rate. So 1.69% yearly. It's 875 BTC was issued in the last 24 hours. So, not much really, considering there's 19,463 BTC out in circulating supply. So yeah, ultimately we are in an interesting spot. There are 1 million active addresses out of the 48.6 million, 424,000 transactions at $578,000 and so forth. So it kind of gives you an overview. 62% down from the all-time high and all that kind of stuff. Going over into the liquidations, there's been liquidations in the last 24 hours of $5 million. Binance is the exchange with the highest value of liquidations at 1.64 million. 50% were long positions, 49.18 were short positions. So we know that actually it's pretty much a mixed bag. The market's just been going sideways over the weekend, which is why we don't like to trade it. Binance being 32% of all liquidations, OKX being 31%, Huobi being 20%, Bybit being 9%, CoinEx being 5%, which is interesting. CoinEx is climbing up these rankings. It's an unusual activity, something to keep an eye on. It's a bit peculiar to see CoinEx actually as high as it has been most recently. So from like the news side of things, outside of the data, what do we have? Well, we have a top trader issues a Bitcoin warning, says Bitcoin is just 2 weeks after fully retracing the BlackRock ETF news. And I agree, it definitely is. Let me see if I can bring up this on the chart here, right? So we have obviously the move upwards right here. Right, and then it basically retracing the entire move here. Okay, so for the most part, yep, absolutely agree with that. It definitely is weak because we can see that within the internal structures of what is going on, right? So we know that the internal workings are basically indicating to us that things are not looking as strong as they need to be for Bitcoin yet. Not everybody has this kind of point of view. Okay, and we can take a look. We can see that the latest Bitcoin crash is just a final fake out before a mega expansion, crypto analyst. And again, these are people who probably are interesting to say the least with their approaches to the market. Essentially what they do typically is they look at the history and they expect history to repeat itself. And again, for the most part, history does tend to repeat itself, but not necessarily from the point of view that you're looking. If you're just looking at a few candlesticks on a chart and then you're expecting history to repeat itself, it doesn't always work out that way. And so in this particular case, it is interesting because it uses some different technical, analytical kind of points of view, and it gets to a different kind of perspective. However, just because it's happened once, twice, 3, 4 times in Bitcoin's history does not mean that it's going to happen again for the 5th time. Okay, now, as we said, right, either months ahead surprise the market yet again with a rally, or this time is truly different. Now, the thing is, Bitcoin's history, and I've been through this many times before, they all have very same underlying foundational level data. Okay, and what I mean by this is there's no different variables. So if without something different happening, you're going to get the same result. However, in the last year or so, we've actually seen a lot of new things happen for Bitcoin that have never happened in Bitcoin's history before. And this is a big thing, but a lot of people are kind of just overlooking it because they're not really paying attention. Essentially, if we take a look at all the historical movements of Bitcoin and you just look at it from a fib scale point of view, it stayed well within the range of 1 to 1.236 on its retracements. This means it's a very typical 3-wave pattern from an Elliott wave theory perspective. And it also means that you're right within that range where people want to be buying, right? It's gone down to a value level that people are comfortable with, and people want to kind of think that that's kind of, a good place to be. So from a fib scale point of view, that resonates incredibly well with people when you're between 1 and 1.236. And it happened that consistently in the history of Bitcoin on these major pullbacks in the bear markets, the bear market lows landed between 1 and 1.236. However, in 2022, we saw this move down in in June 2022, we saw this move down to lower than 1.382 on the fib scale. That was the first time in Bitcoin's history it's ever done that during a retracement. And then, of course, we can layer that in with going down lower than the previous all-time high. And we can actually see that, for the most part, some of those foundational layers and those variables had changed. That led us down into the November low, okay, where we got close to the 1.618 fib scale. Okay, so what we do know here is that something is different. We have underlined variable changes over the history of BTC. And so when we take a look at these charts where they just say, look, history is going to repeat itself, we have to remember that actually there are things that are different through the most recent price action than what happened previously. And these are not small, insignificant changes. These are actually quite large variables that actually have a good foundation for change in people's behavior. Okay, so if you want to kind of dive into the Fibonacci sequencing, you'll understand how people's behavior react to certain Fib scales, and you'll know that when you start hitting some of these really scary numbers and these scary kind of Fib scales, it rocks the markets in a really peculiar way. And so we'll want to kind of reflect on this. This is a nice chart. It's great to look at, and I wouldn't mind us going to the moon for the big, massive expansion. However, the reality of the situation is we do not have the same setup that we had previously. Even though these indicators might be flashing out green buy signals, unfortunately, like we saw back in June of 2022, all those magical indicators got broken, and here this will probably be the same. Okay, but that's just my thoughts on it. But again, it doesn't end there, because an analyst who called the 2021 crypto meltdown forecasts a new all-time high. Well, I can forecast a new all-time high as well. Ultimately, I'm not too fussed about kind of when and all those kind of things, but there's some explanations to this, some perspective on Bitcoin macro chart showing the steepness in price action relative to the LGC and corrections. Again, they're just looking at the history here, and they're just ignoring some of the other areas. So let's go ahead into our chart. So as I was saying with our weekly chart here, if I zoom on out, you see how I have curved out this line. Let me go find it on the USD chart here. Okay, I curved this line out from all of these low points. Okay, however, you can, of course, just ignore all those and just focus in on these last couple of lows and draw it that way as well, right? And so if we come over to the chart here within the news article, what do we see? Well, let's go ahead and make this a little bit bigger so you guys can see a little bit clearer. What they're doing here is they're basically looking at this little area just over the last little while and saying, look, this is where we kind of end. And look at this area over from the 2000 and 2021 and 2016, 2017 and so forth, right? And they're kind of ignoring the idea that actually this doesn't curve out this way, right? But they've done the top line perfectly fine, but not so much the bottom one, which is an interesting kind of point of view. Now, ultimately, this particular area is actually narrowing down, as you can see here. It's not giving you that kind of, let me actually bring up my chart again. It is not giving you the distance that you would expect to see across the path here. So as you can kind of see, when I've manually drawn this on, connecting all those lows and those highs, we have pretty much an equal distance between the high line and the low line. You're not seeing that from their news article and their particular chart here using an indicator. Okay, so the indicator here is actually kind of narrowing down, and it's basically creating this really tight area at the top over this side, which is great. It gives you the kind of forecast here that you might be moving up, and it's great to be able to sell that to everybody that we're going to the moon. But for the reality of the situation is it's not looking to necessarily play out this way. We already know that there's a potential move up here, but I think that's kind of come to an end now. But it's an interesting kind of point of view nonetheless, specifically with some of these indicators that allow you to kind of look at things maybe slightly differently. Again, I'm not big on many indicators. I much prefer to kind of draw the analysis out myself. This correction may last through to the end of the year, 50% fib time extension. Again, I don't really believe that indicators can time the market very well either, but it is what it is. Possible fib target for this correction has kind of got that scaled out in there, and eventually move back upwards, which is interesting. Ultimately, though, there's a few other indicators in here, like MACD. I don't believe that's a good indicator. Is a very laggy one. I much prefer the stochastic RSI, but it's an interesting kind of point of view, because I do think that we are going to be seeing a correction to the downside. I think we align with this, specifically if we come back into here, right, we are talking about a correction down to the previous lows that we've seen so far, and it would be interesting if we come back down to more 38.2% retracement. I don't think we will, but there's some interesting stuff in that, and of course, I think a new all-time highs will be around the corner as we kind of get through the majority of 2024. I don't think we're going to see these kind of all-time highs anytime soon, but it is what it is. Taking a look here, we can obviously see that the fib scales are also kind of listed out, and the MACD is an interesting point where they're looking for potential swing upwards, but I don't think that's going to be the case on the weekly time frame either. Sorry, on the monthly time frame either. I mean, it's going to take a fair bit longer to play out, in my opinion. But, it is what it is, and we'll see how that kind of progresses over time. Let's go ahead and start talking about those exchanges again, because we were talking about liquidations quite a bit here, and these different exchanges, with CoinEx actually creeping up the listing a little bit. I think when it comes to exchanges, the best thing to do is obviously make sure that you do not have keep your crypto on the exchanges, and that you do become self-custody of your cryptocurrency assets. It can be a bit of a minefield. It can be something quite daunting to many new people, where you kind of become the gatekeeper of your own crypto. However, it is potentially the best thing to do, because some of these exchanges, they might not be around for the long term, right? And there could be some potential issues, more insolvencies and so forth. Ultimately, when it comes to exchanges, the best thing to do is to make sure you don't have your crypto on there, and to register with as many as possible, so you have many options when it comes to moving your crypto back to the exchanges. So there's many different exchanges. BitGet is my go-to platform. I use it for 100% of my leverage positions and 90 to 95% of my spot positions. I would be more than that if they would list a few of the additional cryptocurrencies that I'm interested in, which I'm still working on, so you never know. Maybe it will become 100% of my spot in the future. Ultimately, though, it's not the only exchange that I have access to. I have accounts with Binance, Coinbase, KuCoin, Gate.io, Crypto.com, Bybit, and so many others. And this is for good reason. It's a good strategy to make sure that I have access to as many as I possibly can, so that I do not actually get myself caught out when the bull market comes. Maybe I'm only on a handful of exchanges, like one or two, and both of them happen to go down at the same time because there's such huge demand for logging on to try to sell your cryptocurrencies. So by having access to as many different exchanges as possible, you set yourself up for success in the future. So if you haven't yet signed up to BitGet, the affiliate link is in the description down below. If you do use that link, you will be eligible for up to $8,000 in the rewards, depending on how much you deposit and trade on the platform. There's many other links in the description down below as well, but I do encourage you guys to sign up, work out how to deposit fiat, how to withdraw fiat, how to deposit crypto, how to withdraw crypto, how do you do you need to link a bank account? Do you need to do KYC? All these things are very important. You work them out now whilst the markets are quiet, so you don't have to worry about it in the bull market. All links are in the description below, and more can be found down in our Discord server with the link to Discord in the description below. Guys, check it out. I don't think you'll be disappointed by what you find down there. Which brings me on to the trade element of today's video. If I'm to trade this one, how am I going to be trading it? Well, this is actually probably not the best trading position to find ourselves in at the moment for Bitcoin. I think what I would probably do is be looking to kind of go long once we come down into this low area here. We're keeping a nice tight stop loss and a good risk reward ratio. I would like to short the market, but that E wave is quite difficult to get a good read on. Could be a good reason to maybe have the stop loss above the 200 EMA if we wanted to short this, and then take profit down here at the kind of range of our target, right? So this would essentially be that we put the stop loss at approximately 27,558. We'd put our take profit down at the 24,082, and our entry would be a little bit higher, or just on the 50 EMA where it is right there. Okay, so that's how I potentially would short this market, but I think I would probably give this one a miss. I don't like the setup myself, but it would be how I would approach this one, in my humble opinion. I think that's going to wrap today's video up, though, guys. If you have found it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. Until the next one though, guys, have a fantastic day.